Warband. The runes are clear this morning, Saturday, June 6th, 2026. On Friday, I named the trap, a hot jobs number that would lift yields and fall heaviest on the hardest money on earth. The number came in at double the estimate. The trap sprung. Bitcoin broke a line it had held for 2 years. And then, in the dark before dawn, the engine spoke. Listen. As of just past 5 Eastern this morning, Bitcoin trades at 61,300, down about 2% on the day, and off better than 20% since the middle of May. Ethereum sits at 1,580, down about 5. Solana at $63, off 3.5. Now the why, because Friday was the rupture. The May jobs report crossed the wire at 172,000 new payrolls, against an estimate near 85,000, more than double, with unemployment holding at 4.3. That is the too hot print, and the bond market did exactly what I warned it would. The 10-year Treasury yield punched to a 1-year high, and the odds of a Federal Reserve rate cut did not merely fade. They inverted. The prediction markets now price better than even odds of a rate hike before year-end, a full reversal from the 2 cuts the consensus penciled in back in January. Bitcoin, awake around the clock and hostage to liquidity, read that shift first and read it hardest. It cracked clean through $60,000, its lowest since October of 2024, and broke below its 200-week moving average for the first time since 2022. $1.5 billion of leveraged longs were torched in a single day. The fear gauge printed 11, extreme fear, the lowest reading of the entire year. But here is what the obituary writers missed in the dark. At 4 o'clock this morning, Eastern, as Bitcoin clawed back above 61,000, our own engine, the InvestAnswers Decision Support System, threw a confluence buy on Bitcoin. In the same window, it flagged Ethereum, mean reversion oversold. The selling pulled to a near-term limit. A confluence buy is not one lonely indicator blinking. It is multiple signals aligning at once, and it fired at the precise moment the tape looked most broken. The chain agreed beneath it. That record 13-day run of capital fleeing the Bitcoin funds, more than $4 billion out the door, broke this week, and BlackRock's fund pulled in fresh money on Friday for the first time in the streak. The deepest capitulation signatures lit up together, long-term holders spending coins at a loss, and the supply held underwater, overtaking the supply in profit for the first time this cycle. The same fingerprints left at the bottoms of 2019, 2020, and 2022. I will not oversell it. The great wallets have not stampeded back. Large holder balances are still flat, and one good session of inflows is a repair, not a reversal. This is a base under construction, not a finished floor. Add in pieces, demand confirmation, and let the engine, not your adrenaline, tell you when the turn is real. And the engine was not only flashing green. Into Friday's closing bell, it lit up the other way, across the spine of the artificial intelligence build-out. Intel and the chip materials names trend negative, the copper miners rolling over, the power complex stretched to overbought on Bloom Energy and Eaton. The crowded abundance trade is exhaling at the very moment the scarce one is flushed. One liquidity tide lifts and drops every boat that floats on borrowed money. And only one asset on the board answers to no committee at all. Lift your eyes past the candle, because the panic is pricing a Federal Reserve that can tighten the screws forever, and it cannot. The frame from 22V research cuts clean here. The central bank is caught in a four-corner trap: debt, oil, growth, employment, and cannot truly normalize without snapping one of the four. The hike the market suddenly fears is a threat the math will not let them keep. Barbarism is the natural state of mankind. Civilization is unnatural. It is a whim of circumstance, and barbarism must always ultimately triumph. The committees and the coupons are the whim. The fixed supply money beneath them is the natural state, and it outlasts every soft system built to manage it. Now to the other pole of this market, because while capital fled the liquid scarce asset this week, it is climbing over itself to reach a different one. The largest stock offering in the history of capital markets is now running better than 2 times oversubscribed. The SpaceX book, $75 billion of stock at $135 a share, a valuation near $1.75 trillion, has drawn demand reported near $150 billion. $2 chasing every $1 of stock on a deal so vast no prior offering has come close to its size. It prices Thursday the 11th, first trade Friday the 12th on the Nasdaq under the ticker SPCX. Read what that tells you. Risk appetite is not dead, it is selective, and it is hunting scarcity that already prints cash. The engine under this rocket is Starlink, north of $11 billion of revenue last year, more than $4 billion in operating profit, the true profit center of the whole enterprise. Cathie Wood called this weeks ago. Voracious retail appetite, she said. Volatility as opportunity, not risk. The 2 times book is her thesis printing in real time, with a full 30% of the shares set aside for ordinary stackers, triple the usual cut. The bears will tell you the price is a fantasy, and the value shops peg it well under the ask. The bulls see a company the market is sizing for this year when it ought to be sized for the next decade. Both can be right, in sequence. Hear me plainly. This is an ownership stake in orbital scarcity, not a first-day lottery ticket. If you reach for it Friday, reach with a holding period measured in years. Stay in Musk's orbit a moment longer, Warband. 2 marks on the watch list have earned a word this morning, even if that word is wait. First, Tesla, and I will deal you straight. No fresh catalysts crossed the wire into this weekend, and I will not manufacture one. The robotaxi service in Austin keeps running, but hear this plainly. Tesla has not publicly disclosed the size of that fleet, and I will not hand you a count it has never put its name to. The tells that matter sit exactly where they sat. The pace of the robotaxi rollout beyond Austin, every step. Full self-driving takes toward hands-off trust, and whether Optimus crosses from demonstration floor to real production line, none of those 3 moved this week. Call it what it is. A hold. Eyes open. Conviction intact. No new chips pushed onto the felt. Second mark. Grok and X-Money, both flagged on this channel through the start of the week, both still pending. The next Grok, the model we have sized near 1.5 trillion parameters, still carries its target for the middle of June. Now days away, not weeks. X-Money, the payments rail wired into the Everything app, remains in the staging lane with no live consumer launch crossed yet. Read the silence correctly. This is not bad news. It is a countdown. If either ships inside the next fortnight, it reprices a slab of the artificial intelligence and payments map, and you will hear it broken here first. Until the wire confirms it, we hold the watch. Here is the frame, Warband. A hot number sprang the trap. Liquidity turned vicious, and the hardest money on earth took the first and deepest cut, straight through a line it had held for 2 years. But at the bottom of that flush, in the dark, the signal fired, the funds stopped bleeding, the capitulation gauges maxed, and the engine called the turn before a single headline did. Edges are not forged when the screens are green and the crowd is calm. They are forged here, in the red, with a steady hand. And mark this, as the tape printed its most fearful reading of the year, the loudest bull on the street raised her long horizon Bitcoin target, did not lower it, to $1.25 million. Fear screams at the top of its lungs. Conviction says nothing and holds its ground. This is Warband as a service. Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Hold the line.